You're listening to Real Talk Texas with local expert Steve Hakes. Now, here's Steve.
Welcome back. Today in the studio, we're talking about small business administration loans for small businesses in the United States, specifically here in North Texas. And we've got the honor today of having in the studio two gentlemen from Affiliated Bank. We've got Colin Beal. He's head of our SBA department. He's been doing it for over 20 years. And so he's a real expert in that topic and a great resource for you listeners out there. We also have Gary Graham. He's the president and CEO of the bank. And, he can add the flavor as to why we do these things that we do to try to help the community. And that's what I love about Affiliated Bank. We're a community bank really focused on trying to help grow the community, and that's a great thing. And before the break, we were talking about just in general the SBA, the history of the SBA, things like that. And now I'd like to kind of drill down as far as if I'm a listener out there and I've got a business and maybe I'm renting right now for my office or my practice that I'm in. Give me some ideas today, Colin. Let's talk about what are the specific loan programs and what are the differences. I believe there's two major programs, right?
Right, Steve. There are two major programs within the SBA. There's the 7A program, which is the broadest program. Has a number of things we can do within that program. We can do loans to purchase or renovate real estate, maybe construct a new building. We can do loans for equipment or inventory purchases, working capital, maybe to start or acquire a business. And we do those loans on longer terms than banks would otherwise do them, which gives the lowest payment possible and a real benefit to cash flow for the business owner. The other program is known as the 504 program, and that program is primarily for the purchase of long-term assets or real estate. And it is not as broad-based of a program and has slightly different lending parameters. But overall, both programs are widely used and very beneficial in terms of improving the cash flow to the small business.
But if I came to you as a business owner, Colin, I really wouldn't have to know the differences. I would tell you what I needed, and then you would fit me to the right program. Is that what I hear you saying?
That's right, Steve. You really don't have to know which one. And there are certain situations where one may be more beneficial than the other, but both are great programs for the small businessman.
Well, let's talk a little bit first about the 7A. I mean, and who's making this loan? Is Affiliated Bank, I know we're talking about Small Business Administration. That's a federal agency. Mm-hmm. Does Affiliated Bank make the loan? How does that work?
Well, Steve, the Affiliated Bank actually makes the loan. The Small Business Administration does not lend money directly to the small businessman. They work in partnership with banks and other non-bank institutions that have been licensed by them to make SBA loans. So the bank actually makes the loan, and the SBA provides a guarantee to the bank on behalf of the small businessman. And what that allows the bank to do is make a loan we probably otherwise would not be able to make, whether it's a new business or there's a lack of collateral or the business is in an industry that banks don't typically lend to. Those are very common situations that we make loans in.
Well, for me, doing residential mortgages, it sounds a lot like maybe an FHA loan or a VA loan or USDA loan that are really insured by the government. But in those cases, the consumer's actually paying a monthly insurance premium with that loan. Are they doing that with an SBA?
No, it is similar to those programs. There are no monthly extra cost involved in an SBA loan. The cost involved in an SBA loan are on the front end. We're not allowed to charge points or fees on an SBA loan. However, SBA does charge what they call the guarantee fee, which is their fee for providing the guarantee. It's based on the size of the loan and the amount of the guarantee, and it ranges from about 2% to 3.5% of the guaranteed amount of the loan. The bigger loans pay the higher fee.
Now, is that just rolled into the loan, or they have to pay that up front?
It can be paid out of pocket, but I have never seen a case where people have done that, and it's typically rolled into the loan.
So if I'm borrowing $1 million, I'm really borrowing, $1 million, what, $10,000?
Well, the fee on $1 million would probably be something like $20,000, roughly $20,000 or so dollars. And we would have a portion of the loan proceeds carved out for what we call closing costs, which would include the guarantee fee and other fees involved in the loan, such as maybe a real estate appraisal or an environmental report, attorney's fees, other typical closing costs of any commercial loan.
So for me, it would be a lot like a VA loan on a residential because they only have just the upfront mortgage insurance premium, and they don't have a monthly like FHA does or USDA does now.
Okay.
So yeah, that's very much like that. Okay, if I'm out there and I'm let's just say I have an office, I come to you. Let me give you a scenario. I've been in business 2 or 3 years. I'm a chiropractor. I'm fairly successful. I've been renting this space for about $5,000 a month, and I'm really feeling like I could probably, with interest rates today, I could probably go buy someplace and do a better job, for myself financially. Am I a candidate for an SBA loan?
Absolutely. And you bring up a great point about interest rates. They are at all-time lows right now, and projected to stay that way for at least a couple more years. So that's really a good time to do these kinds of things. And so anybody who's considering looking at purchase a building, whether it's the one they already occupy or maybe they need to expand and get a bigger facility, those are great prospects for us. And SBA loans are a great long-term avenue to do that because we can do loans for up to 25 years in the SBA on a real estate purchase.
Wow, 25 years. That's a lot better payment than maybe on a regular traditional bank loan when it might be for 15 years, Gary, on a commercial. What do you guys do?
Sure, it could be. We have some flexibility there as well. One thing I'd like to add is a couple of live fire examples. We have 2 customers right now, both of which want to grow their business because it's a good time in the economy. We're in the middle of this economic recovery, and a couple of these businesses are real estate related. One of them is a manufacturing company, actually, and they both want to grow right now, and there are constraints on it because we're a regulated institution, and as a regulated institution, a lot of times our regulatory body may not like our growth in a loan in particular, which would definitely cause a hamstring of their growth, but they're good with it if it's an SBA. And so we look at that as a very viable opportunity. Again, as I said, SBA is a mainstream product these days. And so we're looking at both of these opportunities as a way to help these businesses grow what they're doing, employ more people, and achieve their personal goals. And we've got this avenue to do it through the SBA that if you don't have that capability in your bank, that it could be difficult to get there. So I think if you have a bank that's telling you no, that we can't do that at all, do your loan, then you should look at the SBA alternative.
If this sounds good to you and you're thinking about expanding your business or changing from renting to owning, and you're a small business owner, pull out your cell phone. Put in this number, 817-925-2546. That's 817-925-2546, and just type in the letters SBA. We'll put you in touch with the right people here at Affiliated Bank that will help you get all your answers for small business loans. Okay, so that's one example of someone who could need a loan. What are the industries you guys focus on as far as being able to help? Or is it very specific or is it very broad? What's that?
It's very broad in terms of the industries. We work with people in professionals or service industries that have a hard time borrowing money because sometimes those loans are strictly based on the cash flow of the business and there's not a lot of collateral available. Gary just mentioned we work with manufacturers. They may have equipment needs or inventory needs. Work with a lot of franchise owners who start out with one franchise and want to grow that business to multiple units over time. I helped one gentleman. He was a grocery store manager. Got involved in a franchise a number of years ago when it was just starting. Today he owns 15 of those, and I think I've made him 14 of those loans over the last 10 or 12 years.
Well, that's a question I get a lot from my customers. If you wanted to start a franchise or buy into a franchise, I always wonder where the people get the money. I'm sure they have to put some of their own money in, but is it a better alternative to go for an SBA loan? How much money would they have to put down? A good example.
Well, generally speaking, most lenders are going to look for something around 20 or 25% as a down payment, and then the bank will loan the rest. And for many franchises, SBA is a very viable alternative because we provide that long-term financing option. And many franchises, particularly those that are leasing space, don't have a lot of collateral to offer. So it's very tough for the banks to make those loans on any other basis than an SBA loan.
Would it be safe to say then you would kind of help the person that's really looking to buy a franchise or get into a business, help them kind of evaluate that franchise? Because if they can't get the SBA loan, the franchise might not be as strong as they say they are. Or how's that work?
Well, one of the things we do look at when we look at a franchise loan is we do look at the viability of the franchise, and we want to see one that has got some history to it, some strength to it, and looks like a good concept that will be around, because in most cases we're making a 10-year loan. So we do look at that. Not really our role to advise the owner if that's a good program for that individual or not. They have to make that decision. But, that is part of what we look at.
So you would probably be more apt to give a loan on one that's a known franchise rather than just something that's brand new.
Right. Yeah. Startup or there are new franchises popping up all the time, and those are harder for banks to loan on because it's more of an unknown. We don't know if that's a good, viable product or service, and so we look at the more established ones. And again, banks will differ, but typically you want to see there's a number of years of history in some units out there.
Well, stay tuned. After the break, we're going to come back and we're going to talk some more with Colin Beal and Gary Graham of Affiliated Bank, and about how they're helping small business in the DFW Metroplex and how they're giving advice, giving them money, opportunity to help their financial situation. And so stay tuned. We're going to share some secrets about what are some of the key things that you would need to come to the bank when you're getting ready to ask for some assistance and to help grow your business, be it through an SBA loan. And there's other things that the bank can do as well for our business owners out there. So you're listening to Real Talk Texas, KLIF 570 News and Information.